This is Justin Pulitzer. This is my weekend video for the week ending February 8th, 2015. Pretty ambitious video here with a lot of symbols to cover, so let's dive right into it. As you can see in the S&P, we were looking like we were going to break down, but we again held this range. If you look in the SPY, we actually held it to the tick. The low of the day was 197.86, and the low here was 197.86. Coincidence? I think not. This still shows me that we are in a responsive market as opposed to initiative, meaning that it's short-term money pinging levels, which to me still means ranges are very key. So you can see we came back up here. We broke what I had drawn in as sort of a potential downtrend, and we looked above the high here on Friday, but came back down on some more Greece news. You can see Wednesday we had a similar situation. We kind of came back up to the upper distribution, sold back off, and then on Thursday there was a bit of a gap and go. I think a lot of people, shorts hadn't covered here. I still think that there are potentially a decent amount of shorts in the market who didn't really believe this, and they're kind of holding on. And I think that there was maybe some responsive action up here at the highs with people who figure we're just in a range and they're going to try and get short up at the highs. And that's, to me, what had happened Friday. Some things about the action on Friday, my analysis of it, is that it wasn't really as bearish as a lot of people may have thought. That may materialize into further weakness into next week, and I'll discuss what that might look like. But let's discuss what this bar really is. If you could take a look, I've talked about this 205.38 being the beginning of the upper distribution in order to keep the all-time highs in play and potentially new highs. And you can see this bar here closed still above there at 205.55. Above that range, just barely, and also still above the 50-day moving average. You can see the 50-day has been important because, see, we came down here. Once that was lost, we fell down. Here we rallied back up above it. Again, once lost, we retested and then fell back down. Same situation. So 50-day to me has become really important again. I mean, it's always one of the most important moving averages, but this 204.39 on any weakness is really going to be key. If we can get over the Friday high a day, I do think that the all-time highs are in play, and it'll probably be a pretty straight shot. The alternative is just to chop sideways. If that is what happens also next week, then I would say that the impetus is probably for up, just because we would be consolidating at the highs and would have broken the pattern of these 100% retracements. So what does lower look like? Lower to me would look like if we broke the 50-day as discussed. I think we would fill this gap up here to this 201.92, which has been roughly around this 201.90, which has been an important intermediate range. So if we start losing the lows of Thursday and Friday, then I think the 50-day is key, and if that's lost, then I think we will fill up this gap. At that point, we'll have to reassess. The pattern has been for lower. Once you get past that area, we've had these 100% retracements, but I'm sort of on hold here. I'm a little bit more neutral. I'd like to see the market work itself. I'll be playing, I guess, above the highs of Friday. I'd be playing long, and below these lows, I'd be playing short for a bit of a retracement here. If you take a look at the ES, that had a bit of a funny close on Friday because after the market closed the last 15 minutes, there was a bit of a rally, and I think that's because the market on close orders had a positive bias. And if you look at the close on Thursday, it was 20.56. And if you look on Friday, when the ES actually closed, it was actually at the high of the close. So this doji is pause, and to me has me thinking that there is potentially more upside just because we've rallied back up with the 100% retracements. And this to me is a bit of pause. So that's why I was saying that I didn't think Friday was as bearish as everyone made out to be. I'm going to flip back to SPY. I'm just going to review those levels one more time. Anything below Thursday's low and the 50-day moving average, I think, is a short back down to this range. Anything above that high, I think we're playing for a retest of the all-time highs and probably higher. IWM, Also, actually a little bit more bullish. You can see it tested back up into this the old high area and just had a bit of pause, closed a little bit stronger than SPY. So IWM has been a bit of a leading indicator, so it may be again. It is, I will say, kissing the backside of this prior uptrend line, so there was probably some responsive selling again up here at the old highs and at that backside. So the Friday levels are going to be important. I'd say below there we would probably come back down more into this range, into the 118s. If we can expand here, maybe we really do finally get some range extension on a breakout above these 201s. Lord knows we've had enough touches lately. We've had a lot of backoffs. It's just been chop. But this is going to be at a decision point here, I would say, really soon. Q's, a little bit more relative weakness, not back up at the highs. Closed here roughly around the 50-day, maybe slightly below. I wouldn't say that we did have a gap fill here, and that's probably just some responsive selling as well. I think there was also just some profit taking because there's been a lot of movement in some of the NASDAQ stocks. And to discuss that, I'm going to... I'll discuss Apple a little bit more. I think that Apple's going to, and Google in particular, are going to have a lot to play with this, just because of the moves that, or I should say, the percentages that those stocks hold in this index. But Qs have me a little bit more cautious, considering we are not at, we haven't taken out even the last recent swing high. So Qs have us on a little bit of caution mode. TLT, I had discussed in real time taking a short here. I did a put spread. The puts were even. It was long 132s and short 127s. This came down pretty fast, a little bit faster than I had thought it might, but I did discuss covering a little bit here, and then actually did discuss covering a little bit more here, and I'm actually really fully out of the trade here. I'm sort of sorry I am, because there is some potential for lower, but this did move really quick, and this was a pretty big win for anyone who took it with me on any one of these pullback levels. So that is TLT. If rates are going to come down, I think that this is just taking back some of this spike move. I think that it will find some support if we do wind up coming down here close to these 127s. You can see that there's it may chop a little bit, but this was the backside of the prior channel, and even this now proving to be correct channel. So I would think in this area here, it's going to find some support for a bounce. So that is TLT. Crude oil, I had discussed last week it having a little bit of a look below range and fail, and I think you had a bit of a short squeeze. It is kind of come into some resistance here with the 50-day moving average, roughly a little bit higher, roughly around these highs. If that is taken, though, the primary downtrend has a ways higher up into the 70s, and that was really where this breakdown became. I mean, you can see this is really where the volume is. There has been no volume. So I don't know if this area here would provide as much resistance as you might think. So I would say that this is going to be a really key inflection point for the next level. That is my take on crude oil. Let's get to the meat. Apple. So is Apple... topping out? I know a lot of people have been discussing this as potentially the case. I know a lot of the people who have doubted the move the entire way up are now questioning the validity of the breakout. I think that the stock looks like it probably wants to work higher. It may need to go a little bit lower first, but I do think that it is holding relatively strong. You could see before the earnings, there was some panic. I had discussed this being a long. The day of the gap, there was nothing but sellers, which was interesting to me. I guess a lot of people I had discussed played long with calls, and I think they were just booking their profits. But the next day, back up to new highs, then some more chop, and we've kind of been working our way higher. And even with Friday's weakness into the close, Apple still closed over the high of day of the earnings gap, which is 118.12. So if you're looking to be really, really short term, anything above this is bullish, anything below it is a little bit more suspect. I would say that this area of this prior backside of this other, I would say, uptrend channel is really key around these 117s. If we lose the 117s, then we're talking 115s, and we're back, talking about the flash crash close. That close was 115.07. So this low here of 115.31 to 115.07 is really, really key if there's some type of a sell-off. Maybe there's some market weakness, or if there's, just more Apple profit taking. I do think that Apple is in play to, since we did take these old highs, to get to the 1.618 fib extension, which is 128.97. But in true Apple form, it only rewards the true believers. It doesn't kind of reward the Johnny-come-latelys. So I do think that there's a lot of retail playing long, and I think that's what's been some of this this choppiness and weakness, just because you've had a lot of people who are playing long and maybe getting a little frustrated. So Apple, I do think bullish, but I did outline the levels to be cautious with if it does go lower. Amazon, I had discussed being a gun to head. I said that I thought Bezos had a rabbit to pull out of his hat, and yeah, he did. We filled the gaps up to the upside. I would say Amazon, you probably don't have great trade location if you're going to start first chasing it here after this big of a move up in this many days on continuation. I, though, would be saying buy the dip somewhere between this high here, which was, let's say, 349.38, and this high here, 336. So if you can get kind of roughly into the opening day range a little bit, like if we came back down into like mid into this area, I think you can play some buy the dip action with Amazon. But again, I do think that the destiny of the stock is higher. But I don't know if I would be chasing after, this many days up. So that's my thesis on Amazon, that it's probably buy the dip, but a little bit lower. If it keeps going up, just keep, booking profits. American Express is one I was really looking for as a long if it would come down and fill the gap here around the 76.32, which was a little bit below these lows. But what did it do? It decided to rally ahead of time. And look where it stalled out. It stalled out right at this volume distribution and this breakdown of 85.76s basically, and closed with a bit of a inverted hammer on Friday. So I think that this was, again, people, getting excited over Visa maybe. They're doing the split. I do think that, by the way, is also a buy the dip ahead of the split, if you can get in on it if there's some type of a correction. But here, if Amex can get up above Friday's high, I do think it will fill the gap up here. I think there'll be a lot of interested sellers to get their money out. You could also see that roughly coincides with these lows here, where the real breakdown occurred and the failed rally kind of stalled out. So I'm thinking I still would like to get American Express long, but lower, somewhere down in this area near primary trend and near the gap fill. If it does get, like I said, above the Friday high, you can probably play for the gap to fill up to 87.67-ish, like roughly somewhere in this range, I would say, in this earnings day range. So that's American Express. Baba. Everyone wants to talk Baba. I had said that I thought that the stock was going to be under some pressure because of the lockup, and you can see we've now taken out these earnings gap day low, and the stock is showing a lot of relative weakness. However, we do have some reference lows, all-time lows here around 82.81. If we can get down there, and it may do something like stop here and then rally back up, I do think that there is a long to be had down here versus this low. If it gives way, just stand aside. It's going to probably go significantly lower. So Baba, this is going to be row for me, right or right out long, somewhere down here near the 82s for a play back up to the downside of this channel, probably roughly around 90-ish if we could get down there. And that is my thoughts on Baba. If you can do something like get over these highs, though, then I think the channel high is in play, or at least to get to a gap fill, wherever that might be at the time. It may take a few days or what have you, but I would be playing for the gap fill if you can get back up over these highs of this range of like 92-ish. So that is Baba. Hard to talk about Baba these days without YHOO. So YHOO has been in a channel, and we're getting kind of close to the lows. I think that if we can get somewhere close to 40, this area, and which is also coincides with a gap fill around 39.46, yeah, I'm thinking long YHOO again. I think that if we get down there, I'll be looking to sell out of the money puts, probably something 36, 37 strikes. It's also a volume distribution and a reference low. So I'll probably be doing it with shares and put sales and look for some type of a bounce back up into range, maybe somewhere into 47s or I mean, at least to fill this gap to this close, which is close to 47, 46, 46. So that is my thinking with YHOO. Sorry to be blazing through these, but there are a lot of symbols. Chipotle was a consolidation, had a gap or below the earnings, the earnings day gap down lows, and coming into some key volume support with some reference lows down here. For me, this is just a choppy zone. I'm kind of a bit of a stickler for levels, and I would be interested in somewhere if it came down into the channel low, somewhere close to like this 600 area. This also would coincide with a gap fill. This was 589.93, so somewhere down here, if we can, get some continued weakness. I'm not sure that we do, but if we can, I would be a buyer at the channel low or somewhere near these reference lows, but somewhere between 613 and let's say the close here was that 589. So somewhere in this area, I do think would set up for a nice right or right out long for Chipotle. Maybe some out of the money put sales. If we break the channel, you know what that means. That means GTFO and get the F out. So that's Chipotle. Facebook has been kind of just choppy. I had discussed that this looked like there was some type of institutional selling. It's just been choppy. The earnings couldn't go down. They tried to take it down. They believe the low that day was 72. It rallied up. It's still in a downtrend. I think this is just really choppy. If we do get down to these lows again, this 74-ish level, this got a little bit through it. 73s. If we do take out these double, let me zoom in a little bit higher. This is getting a little bit. Yeah, you can see better here. If we take out these two hammers here, and you can see there was a slightly higher low, I think the play would be down again to 72, unfortunately, if you're long. If 72 gives, then we may see these lows here of 70. I just think that this stock is in some chop, and it's just resolving some overbought conditions. And I do think the easier play here is to be short puts on dips rather than owning common. Longer term, I'm a big Facebook bull. I think the stock is going to go to 100, but we may need to see some of these reference lows before that. So I'm cautiously optimistic on Facebook. I'm long with very small with short puts. I had taken a lot of profits here on this pop. They actually wound up killing the short puts. I had some near dated ones, and now I have just some short ones. Around like the 72-ish strike. If that starts coming down hard through these levels, I may just bail on them or do some type of a defensive structure. I think maybe selling short strangles out of the money puts and out of the money calls will probably work for this for a little while. There's a ways till earnings, so that's how you might want to play it. Twitter worked out really pretty well. I had discussed this being a wait until after the earnings and then play it sort of the direction it goes. The initial move was down. It got to 37s. It quickly came back up, and I had said if the, I always say if a stock can't go lower, it's going to go higher. My thinking of this was that there were a couple of things to see. If people who were long were going to finally throw in the towel, and two, if it couldn't go down, would it attract new money? It seems to have done a little bit of both. I had discussed on the earnings gap that we would get to 44s and then 48s, and look where we closed almost to the tick on Friday was to 48.01. So we did fill the gap here fully. We came up. There is probably some interested sellers up here about people who have finally been made whole, who sat through this insanity. I did point out in the past that 35 was a key level if we lost that 29s, but I didn't really see that happening. I thought 35 was the number, and boy was it. It wound up working out perfectly. So what now with Twitter? There is some room up. You could get back up to the IPO day high of like 50 or what have you if there's a little bit more resolution. That has been the pattern of these stocks, that they gap like Netflix and Amazon, and then they continue going. You could see 50 and 52. However, I think that you have not such great trade location here because you could see we did rally up into it. I would say that the better play is to buy it a little bit closer to somewhere between 42 and like this 44.58, like 44.58, 45 level. I think if there's some type of a back off into this range, it will be a buy, and I would do it probably via short puts, or if you want to do it with shares, whatever. The stock has been choppy in the past after earnings. I would say that the short puts are the easier way, and I would be looking. I think we're done with 35s for now. I think we're done with this old range. I think we're in a new range. I think this 42-ish area, 42 to 45 is like the buy zone now for Twitter, and I would do it via short puts. If you're long those, trim and trail, stick with it. You got yourself in a winning position. Someone had asked me on the stream tonight about this FEYE. This isn't really a stock I like. The management, I think, had done some of the no-nos of like the GoPros with releasing lockups and insider selling, and the stock has been in the doldrums for a while. They have earnings coming up, so I figured I would talk about it. I know there's a lot of interest in the stream. We are seeing some things that JP, and yes, I am referring to myself in the third person, likes to see. We are seeing higher lows, and now we are starting to see higher highs. We are, though, coming into some resistance here of these past highs, and after that, there are some more highs up here in the 41 range. I drew a bit of a channel, and I would say that if you want to play this, you want to do it on some type of a breakout of the range here. If you could take out these highs on an earnings gap, or you want to buy it somewhere down near this channel low. I'm not going to play this one because I don't like. Again, once a management shows itself to be a bit of a turncoat, it takes a really long time for me to get back on board with it. However, if we do start really rallying, this stock does have a lot of room up to the IPO high of day. Into that 44 range. If I were going to play this, you can see by the stochastics it's a little bit stretched here. Although if you are in an environment for a FEYE to work, it should be now, right? With all this hacking, the interview, and all this stuff. So if you're a true believer, you might want to take a small position ahead of earnings. For me, it's a no touch. I would, though, be a buyer if we do come down here on some type of an earnings gap down to try a right out on the channel low. If we can break out of the channel, then I would say it's a buy for a move up to the next resistance of the 41.82 and possibly up to 44s. So that's my analysis on FEYE. Gilead is... I had discussed that this I thought was going to be a little bit of trouble because it didn't come down to where it really should have, this 84.40 to 84.50 level. It stopped ahead of there and rallied, and then it came back up and filled the gap. This to me is a classic pattern for a short, or at least take profits or get GTFO ahead of the number. You can see we've gapped below this channel, below the 50 MA, rejected, and now kind of coming back down to kiss the lows. It did hold the 200 though. That is notable. Longer term, I do think Gilead isn't a very expensive stock in terms of the earnings. There have been some concerns with their Hep C franchise. I would be a buyer down on primary trend, maybe if it comes down and coincides with these reference lows. I really would like to see it get, I guess this was kind of close enough. Maybe I nitpicked it a little bit too much. I really should have been a buyer down here. I'm really a stickler for levels, and we didn't get those. So if we do come down and retest there, that could be a good right out trade. If it breaks there, then we play GTFO for a little bit of a filling up down into the lower levels. We'll see how that plays out. I will be, though, a RORO buyer down here if we do come down again. Green Mountain. I had discussed this one and said that the pattern was looking weak. We had broken the channel, retested, and we're just kind of kissing these lows. It wound up coming down and filling the gap, and now it's sort of trying to rally back up. So I think the reason why you didn't find a lot of sellers was because a lot of them came in here. The pattern is still pretty fugly, so to speak, and you did have a head and shoulders breakdown here. I would be an interested buyer somewhere. There is a gap fill. I think this was the Coke gap, somewhere around 80. I'm not sure if you get down there, but somewhere between this 89.66 and this would be like a head and shoulders completion, this 99.85 to 96. So if you could push down into this level, I'd probably be an out of the money put seller down, maybe if we could sell the 80s or somewhere in these 89s. So if it does wind up rolling back over again, I would be a buyer somewhere in this range. I know it's a bit of a big range, but for a stock, like this, that's I want to see the price action down here. I want to see if there's some some people who are going to be responding to here. So somewhere around 90 to me would be a really solid buy for a right or right out type of a trade. If we do wind up doing something like coming back up and filling the gap, you could even do some type of a test short. I probably wouldn't do it right here. I might do it like right around where these lows were, somewhere around 126 half, 127. This area really shouldn't, you have the moving averages that will probably wind up coming down. So that should be a right or right out against that confluence of events. If those break and it does go up, I had discussed this being a buy over 141. Once that happens, and if you could get back into the channel and above these highs, there's a lot of room to the upside. This stock has a lot to prove. It's a bit of a busted chart. I'm just sort of staying away and waiting for these lower levels for a chance to buy, or maybe a chance to short on some type of a rally back up higher for RORO. Google was one that couldn't go lower on earnings, although it really couldn't go higher. It does have higher lows. I think it's in a chop pattern. If money does start coming up out of Apple and Facebook, it may find its way back into Google. I think there's a lot of concerns with Google because of the EU and the possible breakup, but this is setting up a honey of an inverse head and shoulders pattern, and now it's sort of like almost a cup and handle as well. I think if you can take out this 553.93 to 545.41, which was this high, I think you'll fly up to the 567s, maybe 577s. This area would probably be the next target if we can. And there's also a reference high up here. So I'd be looking for this area to break and set. You might want to set an alert on the chart. I would do it now, but we're running low on time. I'll have to come back and do it. So that is Google. If it does wind up having a break up there, I think that would be good. If it can't, and the market gets soft, then we're probably going to come back down and test those earnings lows of 487, which is really where the gap begins. If that starts giving, you're going to have some real issues with the stock, but I have a feeling it's going to wind up holding okay. GoPro, like FireEye, is one of these turncoat stocks with owners that like to sell shares that are supposed to be locked up, whether they call it for charity or whatever. That to me is a bunch of, I have some expletives I'd like to put in, but we're going to keep this as a family show. I don't like when management does that. I think it's Wall Street at its worst, and I think that these bankers should be ashamed of themselves for allowing that to happen. And it really cute how it happened. We're not really up at the highs. Anyway, so the stock showed that they couldn't do well in the holiday period. The stock was kind of coming up. I said that I thought if it had some type of a move up to 64s, that would be the resistance. You could only pray this stock does something like come back up to this downtrend line, and I think that would be a great short spot for a right or right out. However, we are coming back down, and I would say that somewhere in this area we'll probably find a little bit of support. Hope breeds eternal, and there'll be some people who want to buy the stock. Somewhere around this 43 and 36 area. For me, it would be RORO if we got down into like this 28 area. Around there, I would say, all right, it's the same kind of setup as Baba. I don't know if we're going to get down there, though. I have a feeling that these lows down here around this 36 area will wind up holding. You can see this with some reference areas. I might even try it myself for some type of a right or right out trade for a move back up to the downtrend. Maybe that would coincide with the gap fill up in the 50s. But again, I'm not a big fan of this stock. Longer term, I don't believe in the company. I don't believe in the management. I may look like a fool, but I remember Flip Camera. Cisco bought them for like $600 million, and you tell me who has a Flip Camera still. I still have one of my old ones, although I don't use it. I just use my iPhone. But at the time, Flip was supposed to be the big thing, and now they are closed. I'm not sure if that's going to happen with GoPro, but I don't really see how they have anything that's unique. I know a lot of people are talking about it being some type of a social media play. You know what? You want that? There's something already out there. It's called YouTube, which is owned by Google. I think that is the better play if you're looking for that type of a social video play. Again, get back up here into this volume resistance. I think this sets up for a short. Down here somewhere, I think it sets up for a RORO buy. That's my opinion on GoPro. LinkedIn. Holy cow. Wow. Was this a professional gap if I've ever seen one? You had kind of a test here, a test here, a test here, testing up here. Wham. It was met with selling, as it should. You can see we're testing the upper part of the channel. It held to the T. I had said that there might be a secondary channel because we were making some higher lows, although this gave. So I don't necessarily know if I would use the yellow one anymore. I'm sorry, yeah, the yellow one anymore, the green one. So what do you do now? Unfortunately, I kind of think you missed it if you weren't in the stock. If it does do something like fill the gap, like steadily, I think it will be a buy again in this area because I do think it had range extension. I don't necessarily know if it blew its brains out. If it goes sideways for a few days and consolidates, a buy over this high would work. But again, the problem for me is that you're in this, you have a lot of resistance in this channel. It may do something like ride the channel higher. For me, you cannot say you have good trade location here. I would wait for some type of a pullback, maybe like a 50% move into the gap. I don't know if you're going to get a full gap fill just because this is such a shock and awe, but somewhere into the middle range here, you probably can do some type of a buy the dip in LinkedIn. So, hats off to them. They had a great quarter, great story, and they get great stock. And a lot of people have missed it. I think if it does come back down into this area, though, somewhere in this range, it'll probably wind up being a buy the dip. So that's LinkedIn. Netflix. I am also looking to buy the dip if this can come back into like this 412 to 419 range. I think that this would set up here. It's just been doing a nice job consolidating. This may not happen here. I think if you can consolidate a little bit longer and hold into this volume distribution and move over this 457, will probably get you back up to the all-time highs of the 489s. I really don't see why this wouldn't happen unless the market rolls over. If the market rolls over, you will see this area most likely quickly. If the market holds up and we do wind up breaking out, you're going to see the all-time highs in Netflix, I would think, fairly soon. The stock looks pretty bullish to me. It's definitely buy the dip. And if the market has some type of a breakout, you may want to play for that, for the upside. Microsoft, again, rallied ahead. Again, this is the same damn story, right, with these stocks. They rally ahead of where they should. It's coming back up. It may want to test into the gap, may want to fill the gap. I would be a buyer somewhere around these 30, what did I say? I think I had said lower, actually, at the time. This area. Somewhere between 37.5 and 30, let's just call it 39. It may not get there to the tick. So 37.5, 39, I think that area would set up as a buy, although I would be looking for the lower part of that now since we this kind of got close. This is almost like a Gilead, right? It got a little bit close and it decided to rally ahead of time. If we do break over the gap, I don't know if I would buy it the first time, but if it rolls back a little and consolidates, then I would play for the gap fill and maybe it'll coincide roughly with where the downtrend line is for some type of a right or right out short, play long and then flip short. But that's my thinking with Microsoft. I'd really like to buy it down here. If not, I'll play it for the gap fill over the earnings gap, the high a day of that low, which is 43.21. That's Microsoft. Priceline got slammed on. I guess it didn't really get close so badly, right? On Friday, Expedia got their heads handed to them, and Priceline was down in sympathy, but it wound up closing decently. This area to me has proven a lot of support. It's also this channel low. I had drawn in an artificial channel, this yellow one, saying that could potentially be setting up. But Priceline really kind of handled itself fairly decently on these on the earnings of Expedia. It's a little bit of ways until their print. If the stock does wind up coming lower, it may set up for a long, believe it or not, for the earnings, just because a lot of the people who were probably going to sell on bad earnings sold on the Expedia number. And my bias for now is long for Priceline earnings, although I have no trade on, I have no position if it continues weak, or continues chopping or weak. I will make a call on that. It'll be a little bit closer to the date. In terms of trading it now, this area, this earnings gap, this 994, 995, 996, that area is really key. If you lose this 990 low, then I think this yellow channel will come into play, and it may work its way down to this reference support here of 847. It would probably take earnings for that to happen, so it's potential. I will probably do something like selling like way out of the money puts or something on this if there is some type of a move down. and play it that way. So I'll get back to you with my opinion on Priceline, but we are at some really key levels. If you're long, if you're looking for some type of a short, if this breaks, you know, that's the way to play it. If you do want to play long, if you play over this 1053, you could see the channel high, which also coincides with this volume distribution. So that could get you up to like 1080, maybe closer to 1100. So that to me would be probably a sell point if it does wind up getting there. So that is Priceline. Tesla has earnings coming up. I had said that I thought that this would rally up to the channel high. It got close. We didn't quite get there. I really wish it was down and kind of still in the doldrums and retesting this area for the earnings. But it didn't. It did this. So what do we do now? Tesla earnings are on the 11th. That's Wednesday. The expected move is $15.98 on the snap and $18.16 into the expiration of the week. I would say that this one, I want to see how it trades coming into it. If it does wind up coming back down into this area, I would say it probably sets up for some type of a long. Or if it like does some type of a chop, the safer play and the way I'll be playing it is I would love to see this channel break. If that channel broke on like some type of a gap, I would say that the squeeze is on again and the shorts will have been musked and the stock will be on a tear back up to the upside. So I would be looking to buy, somewhere on these down near these this channel low again on some type of a breakdown if we could get down there, or on a breakout over the channel. If you were playing into the print, you should probably be looking to book some profits. You should have been doing it when you were getting up to the top of the channel. It's a little telling that it didn't get there. That is a little bit relatively weak. But if we do wind up coming down the next couple days into the print, I'll probably do something like play it long with like call spreads or like a butterfly or something along those lines. So that's my thoughts on Tesla. I think that the smarter move is to wait till after the print, buy it on strength over on a break of the downtrend, or buy it on weakness down near the channel low. What else? One more is Whole Foods. It's one I've been long. I discussed this being a professional gap and a buy over this high of day, and I've never looked back. And I actually really haven't booked any profits. I better do that, right? They have some earnings coming up on Wednesday. The expected move is $3.89 on the snap, and then into the expiry is $4.22 as of now. I do think if this does wind up having some type of a pop-up, it would be a good idea to book some profits. I'll probably still be long a little bit into the number, and it's been kind of grinding up, which is good, although there is some resistance it's going to be coming into soon. Let's see if it could show it on a daily. Yeah, you can see it's kind of coming into some of this resistance of this breakdown area. So probably a good idea. It's also the 61.8 fib of the retracement from the high to the low to the bounce. Good area to take some profits, and then the backside of this prior uptrend line comes in close to 50, high 56s, 57s. This would be another spot to take some profits if there's a rally before the print. But I do think Whole Foods is back to being a buy the dip. If it has some type of a partial move back down here into this range, I think it's into like 48s. I think it's a buy the dip situation. So that is my weekend review. If you like this video, please give it a thumbs up. Hit the like button. Be sure to follow me on Twitter. My handle is @JustinPulitzer. And I'm also going to include a link to my Risk Management 101, which if you haven't seen, I think it's fantastic. It's a risk management proposition I put together that helps keep people out of trouble in trades. So with that, let's have a good trading week, and cheers.